Money Talks, it's great. We've got the trading desk with Victor Adair. We got the real estate desk with Ozzie Jurek, and very pleased to welcome back Rob Levy from the gold desk. And man, that's a hot topic. I keep watching the price, Rob, and it's holding steady.
Absolutely right, Mike. And last week we're talking about gold touching on 3,600, and you come into the next week and it's now sustained that rally. So, this move in gold to higher prices and holding above 3,600 US dollars the ounce when most markets are at all-time record highs, but, still
Yep.
the gold market as well.
Well, what do you think people are looking at? Now, that's not a great way I've put that. I mean, how do we know what individuals? But come on, there's momentum in the gold market, as you say, pushing to all-time highs. What's your sense of what people are looking at, what they will look at, what stats, et cetera?
Well, one is demand's finally starting to play a factor, and we know, and we've talked about it earlier in the year, especially on the institutional and the big investor side, the speculator, how supply has been constricted, but also the fact that now demand is really starting to play a role across the precious metal space, and helping sustain these rallies. The retail buyer in many cases and evidence is that they've been absent from this market, but signs that they are starting to come back, if it's not just the physical space, also the ETF world as well.
Well, that is interesting. Let me just ask you anecdotal, of course, at Border Gold. Are you noticing a pickup in foot traffic lately?
Absolutely. The beginning of September seen the change, a bit of a sea change from August, where it's a little bit quieter. And, a continued theme of this market from January 2024, 2000 US the ounce gold, and a bit of redemption selling into this market where now it is people comfortable to be investors again and go long precious metals in a little more sustained fashion than what we've seen, previous quarters.
Well, of course, we've been big talkers about having a position in gold really for 10 years and exacerbated after the repo crisis in September 2019, saying, hey, I think the cards are being played right now, big central bank intervention. But we've also been keen on silver. So you can imagine, I got a pretty good smile on my face the way silver's been able to hold about 40.
Absolutely. And, the highest levels all the way back to September of 2011. So you're talking about these multi-year highs. But then, yes, silver in the US dollar range in 40s. I mean, retail investors that are buying physical silver paying $60 Canadian the ounce right now.
Wow.
And we talk about that demand, and we've seen it come back a little bit on the retail side. But, the ETFs tell the story as well. When you look at the first half of 2025, 1,761 tons added to ETFs, but 56% of that occurred in the final month of the first half of the year in June alone. So, it's just these astronomical figures showing that, there is a little demand coming back into this market. It's a little harder to decipher out, is that institutional, is that retail, but it's showing the demand for physical silver.
Well, and again, the ETF market is something we've talked about, with silver. Silver is more difficult, I think, because if you get like $25,000 of gold, it's not that big physical. It's not big, but if you get 25, it's like whatever it is, 7 ounces. But if you get 25,000 silver, it starts to grow a little bit. You had better have a place to put it. So ETFs are popular is my point.
You're not wrong there, especially, someone buys 10 ounces of gold today and it costs them $51,000, and you can literally hold it in the palm of your hand in a tube of gold maple leafs, whereas someone buys a box of silver and they're paying close to $30,000 and it weighs 37 pounds. And, you got to make sure you lift it on both arms or else you're going to be lopsided.
Yeah. Okay, let me throw something out of left field at you because I'm an old guy. You weren't even thinking of being born at this point, but this kind of reminds me, going back, what was it, when, gold had that big run, 1971, 1980, that period of time. And I'm sure we have many people who are nodding their head, but kind of similar, some of the challenges.
It is. And, to me, it's that old Mark Twain, history doesn't repeat, but it also often rhymes. And we're questioning where we are in this rally. The last 15 months, gold has gone up 50%. And, is there a possibility that this rally can continue to move at that type of pace? And that parallel to the 1970s when gold had an 11-fold run between 1971 and 1980s. And, you look at what was going on during that time. There was inflation, there was stagflation. there was also a scenario where credibility of the U.S. Federal Reserve was in question,
Yes.
and the Fed Chair Arthur Burns and being politicized in his role. So, you wonder about what kind of impacts can have on the precious metal, and you parallel that to today. I mean, there are scenarios that could justify a higher
Yes.
movement in gold. And, like we talked about last week, where Goldman Sachs paints out a 5,000 US the ounce scenario, that's how it's likely. And from what we're seeing.
Well, you'll have a smile on your face. We'll be here to chat with you about it. So thanks, Rob.
Thank you, Mike.
Find him at bordergold.com, bordergold.com.